For over 50 years, one unwritten rule controlled global wealth: if you wanted to buy oil, you had to use the US dollar, guaranteeing constant global demand for paper money backed by nothing. But that era is officially coming to an end. Right now, global superpowers are quietly settling energy trades in local currencies, and the decades-long reign of the petrodollar is fragmenting in real time. So what happens when the dollar's monopoly weakens? Inflation rises, purchasing power degrades, and massive institutional capital looks for a safe place to hide. That is exactly why central banks bought a record-breaking amount of physical gold over the last 2 years, while Wall Street poured tens of billions into Bitcoin ETFs. They aren't betting on a total system collapse overnight, they are building a systematic hedge against currency debasement. They are using old-world physical gold for stability, and new-world digital scarcity for the internet age. The game has changed, but most retail investors are still playing by the old rules. Drop a comment below letting me know if you're holding physical gold or betting on crypto for the next decade, and subscribe for weekly financial intelligence.